Hello student. In this video, we'll have a look at modern approach to accounting. In the previous video, we had a look at traditional approach to accounting, how accounts were classified under the traditional approach and the rules of debit and credit to those accounts. In this video, we'll have a look at modern approach to accounting. What is the classification of accounts under the modern approach? Under modern approach, accounts are classified into asset account, liability account, capital account, revenue account, and expense account. So under modern approach, accounts are classified into these 5 accounts. Let's check out the rules of debit and credit to each of these accounts. Increase in asset is debited and decrease in asset is credited. This is the rule for the asset account. The rule for liability account, increase in liability is credited and decrease in liability is debited. For capital account, increase in capital is credited and decrease in capital is debited. In the case of revenue account, increase in revenue is credited and decrease in revenue is debited. And finally, the expense account, increase in expense is debited and decrease in expense is credited. Let's look at the pictorial representation. This is an asset account. The left side is debit side and the right side is credit side. If it's an increase in asset, we need to debit the asset account. If there's a decrease in asset, we need to credit the asset account. Next account is the liability account. Decrease in liability needs to be debited and increase in liability needs to be credited. Let's have a look at the capital account. Decrease in capital account is debited and increase in capital account is credited. Let's have a look at the revenue account. Decrease in revenue is debited and increase in revenue is credited. And finally, the expense account. Increase in expense is debited and decrease in expense is credited. Let's have a look at the asset accounts, the liability accounts and the capital, revenue and expense accounts, the items which come under these accounts. Let's begin with the asset account. Asset account is divided into non-current assets and current assets. Under the head of non-current assets, we have fixed asset, tangible assets and intangible assets, as well as non-current investments and long-term loans and advances. Under the tangible assets, we have land and building, plant and machinery account, equipment account, furniture and fixtures, motor vehicles, office equipment and computer. Under the head of intangible assets, we have goodwill, patents, brands, trademarks and copyrights. So these are the fixed assets. Apart from this, we have non-current investments and long-term loans and advances. Under the head of current assets, assets which are realizable into cash within a period of 1 year, we have cash in hand, cash at bank, debtors, bills receivable, closing stock or inventory, prepaid expense, accrued income and marketable investments. Under liabilities, we have non-current liabilities, liabilities to be paid after 1 year from the date of the balance sheet, and current liabilities, liabilities to be paid within 1 year from the date of the balance sheet. Under non-current liabilities, we have debentures and long-term loans taken from financial institutions. And under current liabilities, we have short-term loans, creditors or suppliers, bills payable, bank overdraft or bank loan, outstanding interest or outstanding expense, and income received in advance or advance income. Under capital account, we have the proprietor's account and the drawings account. Under revenue head, we have sales, rent received, commission received, discount received, and interest received. Under expenses, we have a few expenses which are classified under direct expenses and the others classified as indirect expenses. Under direct expenses, we have purchases, freight, cartage and carriage, freight inwards, cartage inwards, carriage inwards, wages, factory expenses, manufacturing expenses, coal, gas, water, fuel, packing charges, stores and consumables, clearing charges, dock charges, and forwarding charges. Under indirect expenses, we have carriage outwards, rent paid, postage and stationery, electricity, salary, discount allowed, and depreciation. So in this video, we had a look at modern approach to accounting, how the accounts are classified into 5 types: asset account, liability account, capital account, revenue and expense account. We had a look at the rules which apply to each of these accounts. And we also had a look at the items that come under each of these 5 heads.